Hello, this is Joe Pryor, the virtual real estate team in Oklahoma City, and I want to talk about the current interest rate environment that's going on right now. It's the end of August. The Federal Reserve has done as much to probably rescue the economy from COVID-19 as anything that's done, even the stimulus packages that were out there, because they've already put out about $7 trillion in what's called quantitative easing. That's buying mortgage-backed securities and treasuries in order to keep interest rates low. And what this is doing is keeping rates extremely low to the point that the Fed is still putting out about $120 billion every month, plus or minus, to keep rates in a very narrow range. Now, this narrow range is something that I've never seen in my life. And here's the thing. When I bought my first home in 1978, and those were the inflationary years, my fixed rate loan was at 17% interest rate. When I got into real estate, it was about 10.5%. It was 1989. Right now, you're getting, as an investor, interest rates of 3.125 to 3.65, 625%, depending on 20 or 25% down. And that is unbelievable. And when you add to the fact that the Fed is changing its target inflation rate from 2 to 4%, it technically creates a negative interest rate. So now here's the other thing about it. There's a lot of risk management going on right now, and lenders don't want to quote you a par rate at this point. The ones that are quoting a par rate are 5.125, still an outstanding interest rate if you take my 30 years of real estate and beyond in terms of buying homes. But here's the weird thing. One discount point, which allows you to buy down the mortgage, about a year ago would get you down about 3/8 of a point. Right now, 1 point is getting you down 1 3/8 points. In almost 31 years of real estate, I've never seen that. I've never seen interest rates go from 5.125 down to 3.625. And get this, let's take a $170,000 home that you're buying as an investor. And you're paying that 1 point, which is based on the mortgage amount, 20% down. You'd be paying $1,360 for that 1 point. You're going to get your money back in 1 year. I'm fine with 3 years, but you're getting your money back in 1 year. If I take your investment out 15 years, just 15 years, not the 30-year term, but the 15 years, you've made over $18,500 extra because of the difference between 5% and 3.625. And if it's 25% down, it goes to 3.125. So the interest rate environment is a little bit different. Lenders are being extremely cautious with risk management. There's too many refinances going on right now, which is costing the lenders a lot of money because you're refinancing in less than 3 years. What happens with this is that the servicers that buy these loans lose money. Now what's happening is that the lender has to pay the servicers to take the loans. So it's affecting that par rate. There's some companies quoting, I'm not going to do business with you until you pay us 2%. Some are small, some are large. So the interest rate environment is really tricky at this point. But if you're an investor, an owner-occupant, you can understand why it's flying out the door right now all over the United States, especially in affordable markets like Oklahoma City and Tulsa. It has created an unprecedented buying amount of owner-occupant property as well as investment property. Let me show you how you should tackle those interest rates and get you the best possible yield and the best possible wealth position for investing.